Global investors have a long-held narrative for China. It's the world's factory with a vast domestic market and an economy powered by property, infrastructure, and debt. However, things are changing. China is undergoing a structural transformation, and that transformation will bring a very different set of investment opportunities compared to the last. Let me highlight 3 shifts that matter. The first shift is from cost leadership to technology leadership. For much of the last 40 years, China's advantages has been straightforward. Lower cost. Today, China's advantage is increasingly innovation-driven. The world's second-largest economy has become the world's largest engineering ecosystem. Its strength is no longer low-cost labor. Its strength is the ability to innovate, commercialize, and scale at extraordinary speed. Look at industries like electric vehicle, robotics, biotechnology, batteries, and of course, most recently, artificial intelligence. The list could go on. In these industries, Chinese companies are no longer the followers. They are, in many cases, the global leader. And that brings me to the second shift, from localization to globalization. Historically, a Chinese company can become a giant simply by winning at home. Today, the best companies in China build global businesses from day one. They manufacture in Europe, they invest in Southeast Asia, they hire local talent in Latin America. Chinese companies like online platforms, social media, gaming companies, e-commerce are gaining significant tractions outside of China. We're also seeing Chinese consumer brands are building fan base all over the world. Now, if you look closely, the drive for globalization is really everywhere across all industries. And the implication for us is straightforward. When you buy a Chinese company, you're no longer simply buying the growth in China. You're buying a global enterprise that happens to be headquartered in China. The third shift is from growth at all cost to growth with discipline. The old economic model brought significant, impressive growth, but it also created excess, leverage, overcapacity, and lots of environmental costs. Today, China's focus is more on the quality of growth rather than the quantity of growth. And that means greener growth. China is building green energy at a scale, larger scale than the rest of the world combined. Carbon emission is now a core local government KPI. Disciplined growth also means better capital allocation. Across many industries, including the state-owned enterprises, we're seeing increasing focuses on cash generation, profitability, shareholder returns, and return on investment. In other words, China's growth is becoming more sustainable, both financially and environmentally. So what does all these mean for global investors like us? It means the old narrative for China is behind us. The future, the next phase for China is driven by something very different from the past. Technology, innovation, globalization, and sustainability. And the investment opportunity is no longer simply finding beta in China's growth, The opportunity is in identifying alpha generation in companies that's shaping China's ongoing transformation. Companies that are technology leaders, global champions, and disciplined capital allocators. Thank you very much.